Hello and welcome to this Smartvalues podcast on today, 22nd of September 2025. We look at the various facets of the markets that are often overlooked or ignored and are not commented upon. So this week we have the opportunity of looking at a very, very interesting feature of the market that occurred last week. On September 14th, 2025, Larry Ellison briefly became the richest man in the world after Oracle shares surged about 35% on that day. This added more than $100 billion to his net worth, taking him past Elon Musk in the league tables. This kind of explosive behavior is not something that you would normally expect from Oracle. Oracle has generally been a boring stock, so the surge is all the more interesting. We look at asymmetries in the market because that's what the market is all about, asymmetries. And we thought we would look at the asymmetry in Oracle returns over the last 10 years. So in the last 10 years, which is from 2015 to this year, Oracle's return has been 669% or 6.69 times in 10 years, which gives a CAGR of 21%. But here is the nub of the matter. The entire returns, the 669%, the entire returns of Oracle in the last 10 years came in only 19 days. So if you had missed these best 19 days and held the Oracle stock for 10 years, you would have had a negative returns. Of course, it's not possible to know in advance when those 19 days would come, and those 19 days come fairly randomly, and it's not possible to consistently time it. So if you miss the best 19 days, then your negatives would be minus 4%. But if you missed only the best 10 days, then your returns, cumulative returns, would fall from 669% to 87%, and your annualized return would fall from 21% to 6.5%. That is the extent of the asymmetry in the markets, and that is what makes investing and trading in the markets so interesting and indeed so treacherous. So the lesson of this is that by trying to time the market, you can give up a large portion of the returns. So it always makes sense to stay invested for the long run. The best investment mantra is to identify the right stocks and stay with it for the long run. That is the best way of compounding your money. You can learn more about this at smartvalues.co.in, where we discuss and we practice long-term investing. Thank you.